you are a business owner who has a high income and like 110% of other business owners wants to save more money on taxes, then pay attention to this week's video where I'm going to talk about the pros and cons of the cash balance plan, what you should consider when looking at if this plan and powerful tax saving strategy, powerful retirement saving strategy is appropriate for you and your business. My name is Micciche. I am the CEO of True North Retirement Advisors, where we specialize in retirement and exit planning for business owners. Okay, so today I want to focus on and really help you understand 3 pros and 3 cons that you need to be aware of so that you can kind of weigh them and decide, is this plan right for you? Pro number 1 is that the cash balance plan would potentially lower your taxable income and your AGI. Okay, so let's say that you are a consultant, you are a service business, and you are very good at consulting. You make $450,000 in 2019. You're 58 years old, you are married, and you currently have a 401k plan and a profit sharing plan in place. And hopefully if you have these in place, you're maximizing them. So for your age, you can put up to, when you combine the profit sharing and the 401k plan together, you can put as much as $62,000 inside of the 401k profit sharing plan for 2019. Now, when you stack a cash balance plan on top of that, you can put into your retirement accounts $261,000, getting you to a total retirement savings that year between all those accounts of $323,000. So $62,000 from the 401k profit sharing plan, and then another $261,000 from the cash balance plan. You went from $450,000 of income, lobbed off $323,000 from that. Now you easily qualify for the QBI deduction. Your taxable income is lower, your AGI is lower, you're paying less in taxes to Uncle Sam, and you got a tremendous benefit from doing that because you also have all this money that's inside of your retirement account for you when you transition into retirement. Pro number 2 of the cash balance plan. If you are 50 or older, you can put in anywhere from $158,000 inside of a cash balance plan all the way up to $271,000 or more inside of the cash balance plan. Even if you're young like me, if you are 35 years old even, you can put $75,000 inside of a cash balance plan. Here's the thing that I notice with a lot of my business owner clients. You get to the end of your working years where you have 5-10 years left for retirement. You have spent most of your working life just plowing as much money as possible back into your business, reinvesting in the business, growing the business. And so now as a result, you have like 90 or 95% of your total net worth inside of this business. And maybe you're not so sure that you're going to get the value that you need out of this business when you want to retire in order to have the financial security that you need. The beauty of the cash balance plan is that it allows you to cram like a lifetime's worth of saving into 5 or 10 years. So you can potentially still build up $1 million or more inside of your retirement accounts, outside of the risk of your business, in those last few working years before you get to retirement. The other major pro of the cash balance plan, particularly for a closely held business, maybe it's a family business, maybe you are starting to do some succession planning. So maybe there's a key employee or a family member who's going to take over ownership. Well, typically in those circumstances, it's really challenging for the departing owner to get out of the business what they need in terms of the value. So maybe the business is worth $5, $10, $15 million, but the owner taking over can't afford to pay you that kind of money. And in a lot of cases, especially when it's a family member, you don't really want to put, tighten the handcuffs on them either and make them pay you out that kind of money either. A cash balance plan is a really powerful tool to use for that succession planning, because what you can do is that the business makes contributions to the plan, and you can discriminate in the cash balance plan. So you could set this plan up so that only the departing owner is receiving any of this money. Now, in order to do that, you have to pull some other levers and make higher contributions on behalf of other employees outside of the cash balance plan. But you could potentially set up this cash balance plan just for the owner, the departing owner, and the business puts money into this cash balance plan over a number of years. And then when it's time for you to retire, when you want to exit, you could have, $1 million, $2 million in this cash balance plan that helps to fund your exit. So it's a fairly tax efficient way if you're going to transition out of a business where you're not trying to get the most value, but you do need some more financial resources in order to transition, and you're not going to be able to extract that by selling the business. Okay, so let's talk about the cons. Con number one is that a cash balance plan has features of a defined contribution plan like a 401k plan and features of a defined benefit plan like a pension plan. It can be a little bit restrictive in terms of the rules around it. You can't just do whatever you want in any given year. And one of those restrictive rules is that you have to make annual contributions to the cash balance plan. So these are ideal for a business that is less cyclical and more stable. You want to have a business where you are expecting the cash flow and the income to be relatively stable, if not growing, over the life of the cash balance plan, which is hopefully 5 or 10 years or more. Con number two is that because cash balance plans are a little bit more complex than your typical 401k, there's some very special calculations that need to happen every year, which means you need to involve an actuary. And so in order to put a cash balance plan in place and then have the actuary do all their work every year so you stay in compliance, it's going to cost you several $1,000s in order to hire that actuary year in and year out and have them do the work for you. When you're considering the cost involved with the cash balance plan, try not to be, penny wise and pound foolish. For most business owners who are utilizing this in the way that they should, it is well worth the added expense. Okay, and then sort of related to that in terms of additional cost is that because you can use the cash balance plan to discriminate a little bit and you don't have to include everyone in the cash balance plan, typically the trade-off for that is that you're going to have to provide higher contributions to your rank and file employees than you would if you didn't have the cash balance plan in place. So don't look at this as a way to just shell out a bunch of cash for your employees where you're not benefiting as the owner. It's the exact opposite. And in fact, your employees are benefiting tremendously while you benefit as well, because they're getting higher contributions on behalf of you as the employer than they otherwise would have. But because you're doing that, you as the employer can potentially save hundreds of thousands of dollars, if not millions of dollars over a 5-10 year time period by utilizing the cash balance plan. So hopefully that clarifies for you and helps you understand a little bit more what you want to consider if you're thinking about a cash balance plan. If you're like, gosh, this is really intriguing, I would love to be able to reduce my taxes and save a lot more for retirement. I'm close to retirement. I got to figure something else out. Schedule a call. You can click on the link below. You schedule a call with me. 15 minutes, I can answer your questions. I can ask you a few questions to help you determine if a cash balance plan is right for you. In addition, if you haven't already done so, please like, comment, and subscribe to this channel. We put out videos every single week all around the topic of retirement and exit planning, specifically for business owners that are nearing the end of their working years. Thank you so much for watching. My name is Ashley Micciche, and I will see you next week.